That's South Africa's economy, which has contracted by 0.7%. And let's get more detail now from our colleague, and Xolani Mbanjwa is the economics editor here. Bubes, it's as expected.
Yes.
0.7%. The Reserve Bank had predicted 1.1%. Nedbank, it was a figure slightly higher, I think somewhere around 0.8%. This is coming in lower than these figures I've just spoken to you about. Is this a better outcome, and could things have possibly been better here?
This is expectations in line, you can say, better than what the Reserve Bank, as you've mentioned, had actually predicted. But these numbers are actually looked at in months to come as well, when they now collect more data. So it might come back and we are actually in the positive in the second quarter, although I don't think that's possible. Or this number can actually be worse when we actually hear what the third quarter would be. We'll then hear what the actual number is with all of the data that would be available to Stats SA. But 0.7% contraction, there was an expectation of a contraction, particularly in the second quarter, which is between April and June.
I'm going to avoid asking you about the specific sectors that usually have always given us positive numbers, because it does appear that there has been quite a decimation there. And that's because our colleague Kopano Gumbi is at the offices of the Statistician General. Perhaps they will go into that detail, but perhaps for you, very briefly, it's got to do with whether or not the second quarter can avoid a contraction, because two consecutive contractions mean a recession.
Technically, it means a recession, and it's happened in the U.S. So when you say second quarter, you're actually meaning the third quarter. But the third quarter, many people are expecting it to have done well. But this is a concern, a serious concern, on what was already a fragile economy, with many of these sectors not surviving, not actually recovering to pre-COVID-19 levels.
Let's quickly bring into the conversation Kopano Gumbi, our colleague who is at the Statistician General's office. Kopano, good morning to you. Not good news, even though the figures are coming in lower than what some had anticipated to be a very, very big damage to the economy. Which sectors, Kopano, have lost significantly here, and with specific reference to the ones that have always given us positive numbers?
Well, it's no surprise that the manufacturing sector saw the deepest decline in the second quarter, followed by the electricity sector and several others, in fact, that are related to the different sectors of our economy. We saw that decline in the second quarter, leading to that overall contraction that was anticipated. 0.7% is less than what most analysts had forecast for, given what we've seen in the economy. But indeed, all of those factors that played a role, that they expected and guided for, the lack of electricity, the floods, all of those factors played a role, and we saw then the economy coming to a decline, a contraction in the second quarter, as was to be expected.
Yeah. Kopano, I wonder whether the Statistician General had to field questions about possibly the third quarter seeing a contraction, because that's what many are saying the country cannot afford, a technical recession.
Well, Polly, I'm joined now by the Statistician General, in fact, himself, so we can possibly pose that question to him. SG, thank you for your time this morning. We're seeing an overall contraction in the economy. We see that manufacturing sector has declined quite significantly. Let's talk about the other sectors that also saw a decline this quarter.
We have seen a decline in agriculture as well, largely attributed to animal products. But also we have seen a decline in mining and quarry. We have seen a decline in construction. But if you look at transport and personal services as well as finance, they went on a positive growth, but they were not strong enough to offset the negative growth that was reported in this quarter. But when you come to manufacturing, you can already see the power outages that we have experienced in the tail at the beginning of the quarter, but also particularly your floods in KwaZulu-Natal, because there are a lot of plants in KwaZulu-Natal, and the floods have disrupted the economy.
This contraction that we've seen now puts our economy back at which level since we last saw the economic growth?
Well, this contraction has put us at below COVID levels. You will remember that the highest we had ever seen was in the fourth quarter of 2018, which was sitting at 1.153 trillion. And of course, out of that, just before COVID, we were sitting at 1.148 trillion. Then during the second quarter of 2020, which was at the highest level of COVID lockdown, we went below a trillion in that quarter. We went to 952 billion. Last quarter, in the first quarter of 2022, we had seen a recovery to pre-COVID levels, sitting at about 1.153 trillion. But this time we have declined again. This contraction has declined our real economy, real GDP, to 1.148 trillion.
SG, I know it is not in your scope to necessarily predict the future of the statistics that we see here, but I wonder if leading up to going into the third quarter, if you've been monitoring month to month, if we should see any decline in activity there as well?
Certainly, we are monitoring our monthlies, and as we monitor them, we will be able to comment better at the end of the quarter, because the economy is susceptible to shocks both internally and externally, and anything can happen in the part of the quarter that we still are looking at. But as we do so, when we come to the 9 months, now we have released also with this release 6 months to 6 months comparison. But when we come to 9 months to 9 months, I think a lot of commentators will start speculating as to what will happen to the end of the year.
SG, thank you so much for your time. As always, there, the Statistician General, Mr. Risenga Maluleke, just painting a picture for us, a little bit of detail on what we're seeing in the second quarter, the contraction. Xolani, back to you.
Kopano Gumbi, thank you very much there. And that